Hey all, good morning and welcome to ShareTreck. This is Raj here. Today we should celebrate 1 year of ShareTreck's debut as a YouTube channel. On 7th of November, I remember I created this channel and celebrated yesterday by buying a nice panettone. It's Christmas season out here and we started getting those fancy bakeries. Had a little calories. That was my way of celebrating. And I take this opportunity to thank all the subscribers and viewers that have helped ShareTreck to go all the way up to 807 subscribers as of this morning. So I thank every one of you. Thanks a lot for your patience, support, counsel, and company during this awesome journey of discovery and learning. As I started learning about how to do a video, how to calibrate the audio, things can still get way better, but we are much better than where I was on 7th of November 2021 with my very first video. So thanks a lot to all of you. And today I mark the first anniversary of ShareTreck, and I'm really grateful for all your support. On this occasion, I would like to announce that we have a major interview coming up with a genomics company, the CEO of a genomics company, which is on the cutting edge of HIV therapy. So stay tuned. The video might be released in another week or so. We are still working on it, and I look forward to doing that interview and bringing it to you. Also, I'd like to remind you that I'll be on a break from 18th November to 29th November because 1 year of cranking out so many of these videos has definitely made me feel that I need a break. But I have recorded and scheduled fresh content for half of those vacation days already. And in the next week or so, I'll have more fresh content in place so that you don't have any gap in videos from this channel. So yeah, that's my plan. And that said, this morning at 7:25 a.m. as I started recording, the futures index was mildly green, as you can see below. Let's hope this translates into a green opening when the market opens later this morning. So with that said, let's get started with the morning show. Welcome back, friends. Today I saw an article on US housing and wanted to share the key points with you. Because this means a lot for the economy. Homeowner equity peaked at 11.7 trillion collectively last May. All house prices jumped 45% since the pandemic started. And in September, home prices fell from there on a month-to-month basis for the third month in a row. Since July, the median home price has dropped by 11,560. These are all US statistics I'm talking about, not Canadian. This is purely US statistics. The average borrower has lost $30,000 in home equity so far. Friends, these points may be statistics worth mentioning, but what really resonates with me is that in the report, it said that as at the end of September, the amount of collective equity available to borrowers, while still keeping 20% equity in the home, fell by $1.17 trillion since May. This is the first decline in the so-called tappable equity in 3 years. This continuing decline in tappable equity is what will hurt the economy, as it could translate into less car purchases, less vacations, less renovation. And once tappable equity is exhausted in select weak housing markets, we enter the territory of negative equity, where the homeowner does not see value in paying mortgage anymore. That is when the foreclosure starts. With every hike in Fed interest rate, we inch closer to that prospect, and the recession will surely have a good helping of foreclosures. Now, just to elaborate a little bit on tappable equity, when, let us say, you have a house which is worth $1 million, the bank would require you to put 20% so that they give you a mortgage for 80%. And once you start paying down into the mortgage, and once you're owing to the bank is less than 80% of the value of the home, then the bank is willing to lend you a little bit of money from the surplus that you have over and above 80%. And that can be converted into a mortgage so that you pay a smaller amount of interest over a longer period of time. And that's what many people use to buy luxury cars, and many people use that to invest in investment property, like buying a second property and giving it out on rent. So all those things are going to come to a screeching halt as the Fed keeps on increasing the interest rates, and which makes it difficult for people to qualify for mortgages. Therefore, houses stay in the market for long because the buyers cannot afford it. And then the homeowners have to reduce the price so that buyers can afford it. And this is what brings the slow cycle downwards. And as the home prices keep going down, the share of equity in the home for the homeowner reduces, and therefore their ability to borrow keeps on diminishing. So this is the whole sequence of things. So let us remember that the stock market does not truly reflect the happenings of the real world. Most of the time, the stock market is a clinical measure of value, and many times it is forward-looking and very subjective, and it can change at a whim. And this makes it inherently volatile and risky to participate in the stock market. And that's where we try to use the tools of technical analysis and fundamental analysis, which are some kind of underpinning which is much more stable as compared to the opinions of opinion makers in the market, which keeps on changing. So this is our attempt to tame a wild horse, and the horse doesn't get tamed very often. Sometimes we get a small period of good ride, and after that the horse goes wild. So that's what is the inherent nature of the stock market. So let's not forget that. But now let's look at the pre-market price action and see where it's going today. Hey all, welcome back. We are here on the TradingView platform. I'm looking at the Nasdaq futures out here, and today's candle has formed nice and green, but it's still a doji candle in my opinion, even though the bottom wick is slightly longer, because there seems to be some kind of an indecision, and also 47% positive is not something great like 90%. So it looks like we're going to have a green open, but I can't guarantee beyond that. And with that said, I think let's go and have a look at indicators. US oil is down, which is a good sign, and we are down below this line of support of 91.70, which could now become a resistance for us. So I'm going to mark it as red, and there we go. And I hope, let me make it a bit thicker so that you can see it on the smaller screen. We still have support from the 10-day simple moving average at 89.26. QQQ was up 1.10% yesterday, and today pre-market it's up 0.42, and I think you can see that clearly in the screen. I've just brought it up a little bit. Just going to move it slightly more so that you can see it clearly. And we have a MACD which is bearish, and momentum also is below average, and we have a resistance at 268.74, and we have a support at 260.76. It was the same story yesterday, but we are slightly better than yesterday. If we continue to inch closer towards this resistance, because that means that we have a better opportunity to break through this resistance. That said, S&P 500 was up 0.96% yesterday. Today pre-market is up 0.09%. It's not much to report about, and it could fizzle off before the market open. Russell index was up 0.45% yesterday. Today pre-market is up 0.32%, and we have our 10-day simple moving average, which performs the role of a support at 179.83, and we have our horizontal resistance, which is at 183.72, which is going to perform the role of resistance. Dow Jones industrial average was up 1.32% yesterday. This morning it's just 0.08%. It's not much to write home about, but it's still above the 200-day simple moving average, which is at 325.73, and that's going to be our first level of support today. VIX is up 1.27%, and that's not a good thing, but it's still within yesterday's range. So we have some kind of a consolidation out here, and the support at 24.28 has been holding up the VIX for a while. Today I'm hoping that we break down below that and test the support here at 23.33. So that's going to be the ultimate bottom for today if we break through the support at 24.25. And then looking at the US dollar index. US dollar index is marginally up by 0.10%, but still we seem to be in a bear channel, long-term bear channel, which is a good sign for us. Our MACD is bearish, and also momentum is below average, so I'm happy with where the US dollar is right now. Then let's go on to have a look at the index movers. Microsoft was up 2.93% yesterday, and today it's up 0.25%. Not sure if that's going to hold on. Apple was up 0.39% yesterday, and today it's up 0.32% pre-market. That looks a bit attractive. Maybe Apple might support the index. Amazon was down 0.49% yesterday, and it's up 0.41% today. And with the gap that needs to be filled up, I'm hopeful that Amazon will try to consolidate and move up a little bit and support the index today. Google was up 2.25% yesterday, but up only 0.18% this morning. So among all these four candidates, I just think Apple and Microsoft might be the ones that might give us support to the index. Then look at commodities. Wheat is up 0.79%, and we have copper up 0.53%. The copper is definitely finding a lot of support at 3.55 because it stayed about that for the last 3 days. And It's a bit worrisome because at elevated levels, copper could indicate the impending recession, and wheat prices going up is definitely not good for the inflation scenario. So those are negative for the stock market. So I'm just going to sort this out and say Bluebird is on the top with a gain of 11.09. I don't have much to talk about Bluebird, even though I'm very excited about it because I published a video yesterday. So anything I say would be a repeat of what I spoke yesterday. Let's go on and look at Poseda, which was up 5.2% yesterday. And there is no trades pre-market. I didn't check pre-market trades for Bluebird. Bluebird has a pre-market trade which shows that it's up 2.35%. So sorry about that. Bluebird is doing well today this morning, and it's already gone above the level of resistance of 6.86. So I'm going to mark all the previous lines of resistance as lines of support. I'm going to make this line a bit thick so that you can see it on a smaller screen. This also becomes a line of support at 6.86. So we're going to get support out here. And we have a resistance, which is going to be this minor line of resistance at 7.40. I missed the boat on Bluebird, my friends, because I was focusing on DNA and Invite. I missed the bus out here. Yeah, Bluebird is out of reach for me right now. But those of you who already have Bluebird, you may consider doing a covered call. Of course, this is not financial advice. This is just personal opinion. PSTX has got no trades pre-market. PSEB was up 2.06% yesterday. Pre-market, it's down 6.29%. It's forming the handle out here. And let me see if there's any news on PSEB. There is no new news on PSEB, so this is some random movement. SQZ Biotech was flat yesterday at 2.79, and today also pre-market, let us see where it is. It's down 3.23%. So I'll be watching SQZ Biotech to buy when it drops down further, but it's right now consolidating in a upward trend. So I think if we have a pennant out here, then we're going to break on the upwards. IDNA was down minus 0.41% yesterday, no trades pre-market. Teladoc was down 0.44% yesterday, no trades pre-market. IMTX was down 0.48% yesterday, no trades pre-market. Invite was down 2.44% yesterday, and pre-market it's up 1.25%. I am still waiting for it to come somewhere closer to 2.15 in order to pick up, so I'll watch for it to come down. We still have resistance from the 10-day simple moving average at 2.49. ARCG was down 2.86% yesterday, no trades pre-market. CRISPR Therapeutics was down 2.89% yesterday, and pre-market it's up 0.60%. We are still within this bear channel, and we have a resistance at 50.83, which is going to stay intact. I'm just going to make this line a bit thick so that you can see it in your smaller screen, and our support at 47.93 is intact. Allogene was down 2.89% yesterday, no trades pre-market. Illumina was down 3.20% yesterday, no trades pre-market. And we still have the handle pattern forming. And I'm hoping that we're going to consolidate and then start moving upwards with a target of 271.90. Caribou Biosciences was down 3.32% yesterday, no trade pre-market. Editas was down 4% yesterday, no trades pre-market. DNA was down 4.40% yesterday. Pre-market, we are up 1.67%. I'm very anxiously looking forward to Bluebird touching somewhere closer to 2.33 so that I can buy it. So I might be watching it very closely today, and at every drop, I might try to buy a little bit of DNA. Intelia was down 4.73% yesterday, and it's got no trade pre-market. Beam was down around 11.43% yesterday, no trade pre-market. Verve was down 30.49% yesterday, thanks to their earnings report and also the news that a hold was put on Verve 101. So I bought a little bit of Verve yesterday and hoping for a bounce back, but unfortunately this morning it seems to be falling further down by 2.71%. So I'm going to hold on and see what happens out here. Because we're already at the very bottom, we might bounce back from 26.62 or from 30. So one of those two things is likely to happen today. So with that said, my friends, I'd like to bring this video to an end. If you like this video, please press a like out there, and please feel free to put your comments below wishing the channel happy birthday. It's the first anniversary. So I would be really delighted to see your messages of support out there. Thanks and have a great day, and please do not forget to put a like out there, and also if you're not yet subscribed, please subscribe and help us grow this channel. Bye for now.